Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So what we got going on today, guys, is stocks to invest in 2018, and I'm thinking of creating this maybe not into like a series, but if like let's say a certain stock comes onto my radar that it's interesting to me, I'm thinking of going over, important things that we should know about it, whether it's, news related, look at their stock, give you some charts, and give you my opinion on it. So that's kind of what I want to go into. I did do kind of a similar thing with Apple. I did stocks to invest in 2017. And actually, since then, Apple did very, very well. If you want to check that out, I mean, it is a little bit late, but it's going to be down in the description if you want to check out like the structure that I'm going to have for these videos. Anyway, guys, this video is going to be stocks to invest in 2018, and we're going to be focusing on Disney. Now, I've been focusing on Disney for a while. I am an investor in them for a few years now, but since they did release earnings and they are making some big moves, I wanted to finally talk about them. So as you saw in the picture there, they did release earnings and they did miss them. But the stock did go up a bit after hours. Now, what was going on with Disney is that a lot of people and investors and a bunch of everyone basically were focusing on ESPN. They own ESPN. It's a huge income stream that they have. It's like, I think it's between 40 to 50% of their income. So it definitely is a huge player in their portfolio. So as people kind of shy away from like regular TV watching, ESPN subscribers and watchers have been declining for years now. So that's why a lot of people are kind of getting away from Disney. Alright guys, so I'm going to be showing you some charts now. By the way, today is dated for November 9th, 2017. So if you watch it later, just realize that it's that date. But let's look at Disney right here. So today's Thursday, but they closed at $102.68. And you can see for this week so far, they are up a good amount, up 4.4%. But for the year, they are still slightly negative, around 1.5%. So a little backstory, Disney was doing very, very well a couple years ago. Their growth was phenomenal. I remember when I first started getting invested in Disney, which was a couple years ago, they had really nice year. I think a return was like 40 to 50%. Awesome. So a bunch of growth investors were definitely into Disney, and I'm pretty sure hedge funds were into Disney as well. So like supposedly, millionaires could only invest in hedge funds, and hedge funds were going into Disney because of the huge growth. During that time, I think like Frozen just came out, or maybe the sequel to it, but it was doing very well, and that was like its main focus. So now I want to show you guys a year-to-date chart. You could see since the beginning of January, it was climbing. It did peak around $115, but since then it has been dropping for a while now. And that was mostly due to the ESPN numbers and the news of how that section of the business is declining. Now, obviously, guys, everyone knows Disney. They've been around for decades and generations. Everyone goes to their amusement parks. Everyone sees their movies, right? So whether you invest or don't invest, you have to realize it is a safe stock. It's not like they're going anywhere anytime soon. So that's why it's a good steady stock for the long term. It is a good play, but should we get in it now? So like we just saw with the earnings, ESPN numbers are definitely affecting it. So it has been declining since then. Since maybe like middle of the year, has been declining very rapidly. But with this new earnings release, the CEO, Bob Iger, I want to say Iger, but he's a great CEO, and he focused on the new Star Wars trilogy. Now, yes, Star Wars, Disney owns them, so they're definitely going to do well from it, since they did, and they're talking about releasing a new trilogy for Star Wars. That's huge, so that's why even after hours, I think it pops maybe like just under 1% after hours. But a lot of people are focusing on that because of the growth behind it. So with Star Wars, it is being released, The Last Jedi is being released in December. So I think when that releases and, the huge amount of success they're probably going to have, just because, whether you like it or not, people are going to go and see it. It's just the thing to do. So once that comes out, I could definitely see it rebounding even faster. So yes, ESPN is a concern. However, there are new things that we are able to look forward to, like the Star Wars trilogy that we talked about. They're also thinking of getting into streaming. They're planning on taking new releases away from what they have on Netflix. I believe starting or like completely finishing up by like 2019. So they're really starting to attack Netflix and getting into the streaming business. So that definitely helps with the movies and content that they have, and also with some sports things as well. So let's get into what they're actually looking like right now, all right? So this is Yahoo Finance. I have the chart for 5 years. So you could see since around 2015, it's been kind of stable, but it had really nice growth before that. So you could see this is after hours, after the earnings were released. Even though they did miss the earnings, it is still fairly positive because of the Star Wars trilogy. So, we could see, look at the numbers, a little bit lower than the price, but we could see the market cap is just over $150 billion. So, obviously, it's a huge company. Everyone knows Disney. And their beta is 1.33. What a beta means is if the market, let's say the market moves 5%, if a stock had a beta of 1, the market would move, the exact amount of change would be 5%. So since Disney is a 1.33, it moves a little bit more volatile than the regular market. Then we could see the PE ratio, 18.21. Through history, people say a fair market price or a company would have as a PE would be around like a 17, 18, like in that area. So just looking at the PE ratio, it is fairly in the fairly priced zone. And a little bit further down, we could see their dividend. They're paying around a 1.5% yield. So that's not too bad. I mean, it's not a huge dividend, but if Disney goes down a little bit more or stays stable, you still have that dividend to fall back on, which is good as well. And I don't focus on my decision looking at the 1-year estimate that the analysts have, but it's always good to just see what they're thinking. Obviously, you could see it's around $110. So that would be a decent move from what we're looking at now, from the 102 mark. So if you haven't noticed yet, this is the part when we go into actual details with the company. If it's a little boring, sorry, this is what the facts and numbers and all that good stuff tell us. We have to look at it. So let's go into a little bit more. This is just some statistics, kind of tells us similar things that we were looking at. So again, we could see the trailing PE that we saw before was around the 18 mark. And that's what it did for previously. Now the forward PE is what we're projecting for their future. So they're around a 16. So that's actually more fair, even a little bit undervalued if you look at it for a long-term perspective. So that's definitely attractive. It's not like a 30, 50, or 100 PE. That would be definitely overvalued if it's, multiples of 100. Netflix is at that level, basically. But right now, these levels are pretty attractive. Looking over to the right side, you can see the beta again. And the 52-week change. You can see the past year, they are up 6.5%. So it's okay, but compared to the market, the S&P 500, they changed by almost 20%. So you could see Disney is underperforming the actual market. So let's break up looking at these numbers a little bit. It can get boring. So let's talk about more about like news with Disney. Going back to the chart of the 5 days, you could see that it did increase. That is because there are talks about Disney acquiring some things or acquiring Fox as a whole, or some, aspects of Fox. So if they acquire any type of asset from Fox, they would definitely help them for the long term. They're in the, television, marketing, all that type of stuff, business with streaming as well. So especially if they want to get into that purchase would be pretty good. So purchasing Fox or assets of Fox would be a decent decision in my opinion. And even with this decision, even talks of this decision, it even made Netflix drop. So you could see Netflix did drop for this week due to that news. Because if Disney gets into streaming, that's definitely competition for Netflix. So a little bit more numbers here for you guys. Sorry, but this is the income statement of Disney. You could see the total revenue toward the top since 2014. Obviously, they are increasing, so that's always a good sign. You really don't want a company that's declining, but you could see the gross profit. That's going up okay. And this is a little bit further down the page. You could see the net income. So obviously, you want them to have a profit. So you could see that's increasing as well. So that's a good sign. So now we're going to look at the balance sheet that they have. You could see their cash alone comes out to be $4.5 billion. So if they do end up acquiring anything from Fox, they have the cash to do something with that. So that's a good thing to obviously realize. And a little bit further down, we could see their liabilities. This is the type of debt that they have. So you could see the short-term debt is around $3.5 billion. So if they wanted to, they could use their cash and wipe that out. So, they have their strong balance sheet, so that's good. Long-term debt, that's a huge amount of long-term debt. But you can kind of get the feel of how the company's health is. All right, so let's take a step back from analyzing it and let's talk about it. Obviously, there's negativity surrounding not Netflix. That's the competitor that they're trying to focus on attacking now. But there's a lot of negativity focusing on Disney and their ESPN numbers. Obviously, that's not a good thing, but a lot of attention is to that and not looking at long-term things. For example, their streaming, what they're trying to get into. If they do end up purchasing some things of Fox, they could definitely go into the streaming realm, start attacking their competitor Netflix, and, giving their audience Disney movies, Star Wars, even sports streaming. So streaming is a step in the right direction. Possibly partnering with Fox is good. And then, of course, the Star Wars trilogy, guys. The new movie coming out next month, December. I think it's going to do fantastic. Especially with the new trilogy. There's going to be multiple Star Wars movies. So for the long term, that's looking pretty good. So my opinion, let's look at the year-to-date chart again. I think getting in Disney under $100 is actually decent investment. I would suggest doing that, especially for the long term. It has been getting hit. Remember back to the PE ratio. It is fair and maybe even a little bit undervalued if you're looking at the long term. So I think Disney would be a decent play, actually. You could see that it is slowly starting to inch up. But, you know, with earnings, it could be volatile. It could drop a little bit below $100 again. So this is definitely something to either get in or keep an eye on. So if you get in and it stays stable, that's quite all right, just because it has a little bit of a dividend, so you'll be getting money through there. And for the long term, come on, it's Disney, guys. Like, it's going to do fine for the long term. It's not like a name no one knows about. Plus, they have the freaking amusement parks. So I think long term would be fine. I would consider it a buy at this point, honestly. So that's what I think. That's kind of the overall view of what we have. If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people are. Thank you so much for watching, guys, and I'll see you in the next one.